Today we're looking to the rising use of commercial papers in Nigeria and what this actually means for investors. A lot of our audience have actually, asked us to actually touch on this. So we're looking to Idika to actually break this down for us. But before we even go down, right, I would like you to actually just tell us what commercial papers are. Just, what exactly are
like Really said, actually, that is the rising use of commercial paper. Now, commercial papers are just short tenured debt instruments used by corporations, companies, to raise funds for short-term on a short-term basis for management of their working capital and operations. So it's basically a short-term instrument. Most times it is unsecured. That means they don't need collateral. They don't need any collateral from the issuer. So basically that's the meaning of commercial paper.
So who issues commercial papers?
Commercial papers are issued by companies, whether those listed on the exchange and some that are not listed. So it is different from Treasury Bills that are issued by the federal government. So commercial papers are issued by corporations, companies.
Okay. So with the current rising, of commercial papers, by Nigerian companies, which is where our focus, is going towards to, generally. So for the rising use of commercial papers, for Nigerian companies to fund operations, right? And also working capitals. So what are the key drivers behind this trend, really?
Rightly, it is not as if that companies have not been using that, but it's the drivers, the reasons why they are using. Now you look at the interest rate. The interest rate, they return the MPRO at 27.5. So basically, the traditional loans from banks, financial institutions, at least over between 27 to 30%. So which is a bit on the high side. So what is important is what you get from the market. If you can issue an instrument, a debt instrument that can give you that can reduce your cost of funds, I think it is better for you. So now you check the commercial papers issued. Now you see that it's in over between 18% to 27-30%. But I have not seen any that is above 30%. Not the discount rate. So we are talking about the implied yields. So I think that's the reason. Key reason why they are using it. They are using
because it's high now.
Yeah,
right?
It's high now because of the interest rate is high. And if you go to the bank to borrow, definitely you get above that rate they are issuing. And secondly, it is easier to issue. You understand? It's easier to issue. And it doesn't require those documentation, too much documentation apart from your issuers that can do that. So I think those are the reasons. Why they use it now.
Because I noticed the rise, and then we actually did a couple of articles in regards to this. But so with what you said, right? So what are the factors that investors need to consider before investing in commercial papers?
That is a very, very important question. Basically, you need to, what are you getting from it? And that, first of all, what are you getting from it? Then you talk about the interest you are getting from it. So the first thing is the interest you are getting from it, comparable to other instruments, especially the Treasury Bill issued by federal government. So the interest, there must be a premium, because since Treasury Bills risk-free asset, that means whatever happens, federal government must pay. If you are investing in commercial papers, there must be a premium between what you are getting from Treasury Bills and what you are getting from the commercial paper. Right now, based on data available, I think the premium over between 3 to 6%. That means I think federal government today they are doing their primary auction for Treasury bill for 90 days, 180 days, and 360 to 65 days.
And that's ongoing now.
That is today.
Okay.
So, and if you look at their rates for 90-day tenor, you are looking at I think about 18%. Then for 182, we're looking at about 18.5. Then for 1 year, which is the you're looking at about I think about 19.94 using the last previous stop rate.
Yeah.
So now, if you come to commercial paper, I think let's use Access Bank. Access Bank issued last. I think they tried to raise about 193 billion, and they have a discount rate of for the 1 year. I think it's about implied about 24%. You can see the difference between 19.94 and 24%. So basically, there is a premium. So the first consideration is what are you getting from commercial paper compared to Treasury bill, which is the two of them are short tenor instrument. Then the another one thing you have to consider is the creditworthiness of the issuer.
Okay.
You understand?
Yeah,
so you have to find out who is issuing that commercial paper, so that you will not lose your money, even though there are guarantees, there are checks to ensure that there is no default. But you first of all find out how the credibility of the issuer. I think these two things are very, very important. You more consider it.
Okay, so I actually like the way you answered that question, right? Because you brought back Treasury bills into it, right?
Yeah.
So how does commercial papers, right? Well, how do commercial papers differ from government-backed securities like Treasury bills, like you just mentioned? What exactly is the difference? How does it differ from that?
Okay, first of all, let's look at the the similarities. They are short tenured instruments.
Yes.
Maximum of 1 year.
Yeah.
Treasury bills, you have 90, you have 182, you have 1 year. Just the same for commercial papers are between 30 days to 270 days.
Okay.
So they are short tenured instruments issued by federal government and corporations.
Okay.
Now the difference is this: for Treasury bills, they are what we call risk-free assets. That means you are not likely to lose your money if you invest, because it is backed by the federal government.
That's
so whatever
T-bills, right?
Yes, T-bill.
Okay.
Whatever happens, they will pay. But commercial papers are corporate instruments, so it carries what? A credit risk.
Yeah.
So there is a possibility that might be a default, though there are checks, there are guarantees in place by regulators and regulatory bodies to ensure that yes, issuers don't default. But this one has a credit risk. This one does not have.
Okay, so I mean, with what you said now, so commercial papers suitable for retail investors, or is it just what's the word? Primarily for institutional players? Yes. And what exactly is even the advantage, over Treasury bills, really?
Okay.
So that's like two questions in one.
Yeah. If you look at the Treasury bills, yes, is retail investors can invest through their brokers or investment firms. Then basically commercial papers are more for institutional investors. Do you know the reason why? Because of the large amount of money required for you to invest. Normally, once they issue some issuers, some companies, when they specifically mention that this part of CP is for institutional investors. That means they don't require high net worth individuals, because normally the minimum for commercial papers you have about 5 million, and 5 million is not something at that retail end that you can easily afford. So commercial papers are for institutional investors and for high net worth individuals, unlike Treasury bills that are for that retail investors can invest either through their banks or other investment managers or fund managers.
Okay.
That's at least you have that is the difference. So, but for commercial papers, retail investor can still invest can still invest in some platforms. They aggregate investors and buy. Alternatively, retail investors can buy through money market mutual funds.
Okay.
You know, there are money market mutual professional like IBTC, money market mutual fund, First Bank money market mutual fund, and the ARM money market mutual fund. So instead of you buying directly from them, you can now buy from the money market. But the difference is that the yield you are likely to get if you buy directly, if you invest 5 million, it's not going to be the same with if you buy from their money market mutual, because they have to take their charges and at the same time they have to give you. Those are these are the differences you have. Either for an retail investors and the institutional investors. But basically, they are for institutional investors because of the money involved. But if you have up to 5 million
as a retail investor,
yes, you can still invest. I think 5 million are multiple of what are thereabouts. But if you have up to 5 million, you go through your broker and buy directly, which is better. And secondly, for retail investors, you can buy at the secondary market, especially if the commercial paper is traded at the FMDQ. So these are another criteria you have to find out when you want to invest, whether the CP is quoted, is going to be quoted at the FMDQ, because that is where it is traded secondarily. You know, you can buy primarily and you can buy at the secondary market and the primary market. So once the issue now is quoted on FMDQ, say you can equally buy. So retail investors can buy there too. But the problem there is that it does not have that much liquidity that Treasury Bill. So most people prefer to hold their commercial paper in maturity. But unlike Treasury Bills that people can buy and decide to sell anytime. So there is a higher liquidity for Treasury Bill compared to commercial papers at the secondary market.
Okay, so I'm happy you mentioned FMDQ. So, you know, before we go, just what is the role of FMDQ, Securities Exchange in Nigeria, in the Nigerian
there are various exchanges in Nigeria. You have the NGS group, which is into stock. Then the FMDQ. Then you have commodity exchange. You understand? All those things are platform that midwife that manages those buyers and sellers, and they even show fine. They bring the buyer, they bring the sellers together. So FMDQ is where you can now, when these things are, you list them there, you can go there and buy. It's a platform where you can buy and equally sell.
Okay. So what should investors look for? What should they actually watch out for? When considering commercial paper investments.
Yeah, I've already mentioned it. The creditworthiness of the issuer.
Okay.
You understand? You have to watch out the creditworthiness. Then the rate. What rate are they issuing? If Access Bank issuing, what is the rate? Then if another company you feel that is not as creditworthy as Access Bank is issuing, what rates? Then you should equally watch rating agencies like Augusto, Fitch Ratings. Those are the board that now provide you the right information about the company, the fundamentals, whether they are performing very well. Now you can equally ask your financial advisor to check. Normally they release their financials. You check the financials of the issuer. Is the issuer doing very well financially? Especially what you check the debt level, check the operating profit. Normally their financial advisor will advise you look at what we call the interest coverage ratio. Is the company generating enough money to cover its interest expense? So these are the key things. But as an investor, you don't need to go into that. Get your financial advisor, and if you don't want to go through the ratings from a rating agency, that will give you an idea of what the financial position or credibility of the issuer.
Okay, so I mean, we've pretty much covered most of the angles to it, but I just want to also ask, right? So right now, obviously, with the rise, in commercial papers, right? Which this is not what's the word? This is not an advisory.
An advice
for you to
take make a decision or something like that.
It's just his opinion, so we are not advising anyone on what to do. like you said, meet your financial advisor, for if you want to make such decisions. But would you go for commercial papers or treasury bills right now with the rise in the use of?
Well, it depends on what I'm actually looking for.
Okay.
Like I said, the rates, commercial papers on average, let's say implied yields at let's say 27%. Treasury bills yields at let's say upper side 20%.
Okay.
You can see the spread. That's a premium of what? 7%.
7%. 7%, sorry.
7%.
Yeah.
But this one is a risk-free investment. The other one has a credit risk. So is the 7% spread enough for you to take that risk?
Okay.
Do you get it? If it is enough, if you are a risk-averse investor, you go for treasury bills. Forgo the 7% gain you're likely to get from it, and be sure that this thing can give me 20%. I'm comfortable with it.
Okay.
But if you are a risk-tolerant investor, you can decide, let me take that risk. 7% is much for me. Then you have to consider the issuer, especially if the issuer has a better credit rating.
Yeah.
Even near to treasury bill. It's a win for you.
So better credit rating comes with more, they give higher rates? Or?
No. If Access Bank has a credit rate, Access Bank might decide to bring because I have a good rating. That is an advantage for me.
Yes, for sure.
Unlike another company that does not or might not have that type of credit rating like Access Bank.
Yes.
Definitely, people will expect.
Yeah, they will definitely move towards Access
go
Bank.
higher. You understand?
Yes.
So investment that what we usually use to gauge the expected return investors are looking. Normally, what we use a capital asset pricing method, where you have the risk-free method, you have the market return. You have the beta. That is what we call the beta. So when you calculate it, you now get the expected return investors. So that's what we usually use to get. But the most important thing is you must find out what is the premium I'm getting from treasury bills compared to.
We pick the one, whichever one is actually worth it to you.
Generally, the general notion is that if you're a risk averse investor, go for treasury bills. But if you can take risk, you take commercial papers.
So that Kayode, that last question was for you. Kayode is a retail investor, a serial retail investor, and he has just acquired $20,000.
From your lips
to God's Oh my goodness! So it's been really nice having you here.
Yeah, thank you,
Idika. I hope this answers the questions for our audience. They've actually really pushed us to actually speak on commercial papers. So I actually hope this answers your questions. And you can always catch up with us on Spotify. Catch up with us on Spotify and also watch on YouTube. Drop your comments if you have more questions for Idika as well. You can always drop your questions in there and we'll be sure to answer them for you. And till next week, we hope to see you guys again. Take care.